Happy Friday, Eric Bible with the Bible team at Neil Home Loans. I bring better news this week than last. Mortgage interest rates pulled back. Yes, not a significant amount, but any pullback is a welcome relief. Last week, as we know, mortgage interest rates broke yet again multi-decade highs, pushing above 8%. Well, this morning we are below 8%, 7.9 to be exact. And again, not the levels we want to see, but again, any movement down is a welcome relief in this environment. And the question becomes, what drove the retreat and what does it mean for the Fed next week? And what can we be doing in this environment to continue to drive production? So first and foremost, Monday, Bill Ackman, one of the world's largest hedge fund manager, released a statement on X indicating that he was closing his position on 30-year Treasury bonds. He was betting against the rise in yield on the 30-year Treasury and decided to close that position out, and immediately sparked a rally in mortgage-backed securities, which drove rates down Monday. And he cited the economy is slowing at a faster rate than recent data supports, and layering in geopolitical concerns, specifically the conflict arising in the Middle East, it's too risky. What does that tell us? And why did rates respond so positively? As we've seen really for the better part of October, interest rates continue to rise. Mortgage-backed securities continue to deteriorate, and the Treasury yields broke multi-decade highs. With a statement like that of Mr. Aikman from one of the largest money center institutions, they're seeing more support that the economy is slowing at a much faster rate than the Fed is advocating for. So with that, the expectation based on Mr. Ackman's statement was we're going to see additional slowdown, which in turn is going to reduce output from our economic landscape, which is going to force the Fed to have to intervene at some capacity. Now, as we know, our crystal balls are broken. Every prediction throughout the last 14, 18 months has been wrong. What we can look to is data today and make an educated decision on what happens next. The market took that statement and in turn reaction as, hey, there may be choppy waters in front of us. And in turn, the market responded accordingly. With that, for the time being, yes, mortgage interest rates are better. And that dovetails into the Fed's meeting on Wednesday, the 1st, and what outcome will come from that decision. Now, Fed Watch Tool has indicated a 98.5% certainty that the Fed will leave rates unchanged. And if we look to our counterparts in Europe, specifically ECB, European Central Bank, they did not raise rates this week either, citing inflation is cooling, and we're seeing a more restrictive monetary policy, and that sentiment is being confirmed here domestically. So we believe with confidence that the Fed next week will leave rates unchanged, not touch them. Biggest thing that the market is looking for is what additional statements will come from the Fed on future outlook. There's definitely been a lot of movement since their last meeting, both domestically and internationally. And we want to understand what they're seeing in turn for future monetary policy, given the fact that we've seen a relatively sharp pullback in such a short period of time. So as that data comes out next week, we will deliver so you can stay informed. Now that brings us to, well, what does this mean for all of us? How can we continue to maintain movement in both the mortgage and real estate market? And it comes down to opportunity. Yes, inventory is low. Affordability is under question. That has been the prevailing narrative for all of 2023. Yet, transactions are still taking place. People need places to live. People need to sell their home. People need to buy houses. With that, we have to be the advocate for our consumers. There are tools options, products available to address the inventory crisis as well as the affordability issues today. We've shared multiple instances of the temporary buy down, the permanent buy down, bridge options, immediate financing options. The list goes on and on. And yes, rates are high. I do not want to deny that. But there is still opportunity out there. It just comes down to where and how we identify the opportunity. If you're running into challenges with conveying this message, uncovering the opportunity, we would love the opportunity to support you. Make it a great day. Make it a fantastic weekend, and hope you all have a wonderful and safe Halloween next week. Thank you.